Welcome back, everybody. You got Will and I-Man here from the Block Runner, MetaZone, and Rovi, and today we're going to talk about Brian Armstrong, the S.E.C, and ETH being a security.
Not just ETH, right? Like all cryptos, basically.
All staking being securities.
Anything staking, which basically is 99% of everything that's been invented in Web3.
And the biggest thing is really Ethereum, right? If Ethereum's a security, everything is a security.
Well, to be clear, not Ethereum. Like, I guess the S.E.C is kind of, or the rumors are floating around.
Yeah.
That the S.E.C is interpreting the act of staking, I guess, a crypto as like now you've kind of morphed it into like a securities vehicle.
See,
right?
but proof of stake is the very foundation of a token, right?
So now you can get into why, like how, if we were like, I don't know, defending the ethos or like all of Web3 against the S.E.C, what would we say? There's that.
Yeah,
right?
Because that's how the blockchain runs, is through proof of stake. Right?
Well, but then the S.E.C's like, well, then you got this proof of work one over here that seems to be running just fine. It's like, why don't you guys just stick to that? You know what I mean?
I mean,
it's like you can't not have blockchain without proof of stake, right?
Yeah.
Bitcoin proves that. But you have inefficiencies, you have problems with scalability, obviously.
Dude, now that I think about it, had fusion energy existed, would any of this be an issue? But I guess it's just proof of work is not just scalable. It's not scalable enough. So
that would have solved the energy crisis of a proof of work ecosystem. But yeah, scalability is always an issue.
Yeah.
So this is the thing, right? We have to create a fine line. I don't know how we have to convince the S.E.C, not us, because we're not in that position. I guess Brian Armstrong, because he's out there sounding the alarm bells, dude. That implies to me like they're knocking on Coinbase HQ.
Yeah. When Brian Armstrong tweets,
he's kind of like letting everyone know what's happening, right?
Yeah.
Like behind closed doors.
So he's saying that he's hearing rumors about the S.E.C would like to get rid of crypto staking in the U.S. for retail customers. He hopes that this is not the case. I believe it would be a terrible path for U.S. if this is allowed to happen. Staking is relatively important innovation in crypto. It allows users to participate directly in running open crypto networks. Staking brings many positive improvements in the space, including scalability, increased security, and reduced carbon footprints. And there's an article by Paradigm. Ethereum new staking model does not make ETH a security. And he goes on with regulation by enforcement doesn't work. It encourages companies to operate offshore, which is what happened to FTX.
Mm-hmm.
And hopefully we can work together to publish clear rules for the industry. So
hold on, scroll back down. I saw good old Charles Hoskins chiming in, dude. I always like to see what Charles has to say.
Yeah, I mean, Ethereum staking is problematic. Temporarily giving up your assets to someone else to have them get a return looks like a lot like regulated products.
Okay.
Slashing in bonds, not so good. Non-custodial liquid staking, on the other hand, is like the mining pools we've used for 13 years.
Interesting. So that's like Lido. Right?
Yeah.
Non-custodial. Yeah, I kind of like that approach.
So I went to take a look at this article by Paradigm, and it's right here. So it's relatively long, right?
Mm-hmm.
So it talks about how it's not security. So it goes through the legal, claims of what is a security. So it goes through the Howie Test.
Which we've, if you guys have been listening long enough, we've brought this Howie Test up many times because, I mean, dude, it's such a simple task the S.E.C really has. It's just... Yeah. These 4 damn dots, like that's their job. It's just kind of like look around, make sure nobody's like violating or like completing all 4 of them, right? Or
if you don't know what the Howie Test is, it's basically 4 questions you need to ask yourself if you're creating a security or not.
Yeah.
And those 4 are:
is there an investment of money?
Yeah, the first one is investment of money. Second one is in a common enterprise.
Okay.
Number 3, with a reasonable expectations of profits.
Okay.
And number 4, derived solely from the efforts of others.
Gotcha.
So we brought this up a number of times in several videos, talking about different aspects, including Ethereum too.
Well, because it came up, like we talked about before. Now, I guess the rumors are getting more heated, but they kind of like the S.E.C.
already staked a claim in a Ian like Bellina case.
Yeah, a case that was in a much smaller scale, right? But it was like within the whatever the hell documents that form whenever people are getting sued. There was like a 1 or 2 liner in there that just out of nowhere just drops the idea that hold on, like all staking cryptocurrencies probably are securities.
Yeah.
And that was like a big like
Yeah.
moment, right? And we probably made that video like 3 or 4 months ago.
Shots fired.
Yeah, like dude, the SEC's coming in hot, dude, but they're not like letting us know. But anyways, so I guess we're getting closer to potentially a let us know moment, like what their position is on staking. And I guess it makes sense, dude, because even Gensler throws out like little statements here and there. He's like, yeah, I don't like this staking stuff.
Well, not only that, he's claiming that Ethereum is now in the jurisdiction of the United States.
Okay, that's a whole different thing. Yeah,
most of the Ethereum is being staked within the United States, and therefore U.S. runs Ethereum.
Yeah, so let's talk about that. So if these rumors are true, and they want to ban retail involvement, I guess, and like becoming contributors or participants in this like network validation process. Yeah, that doesn't necessarily mean like Coinbase is going to diminish its like position of influence on Ethereum, because right now it's got like 25% of like the entire network, because it takes retail customers' funds, right, their ETH, and then I guess stakes it on their behalf,
right,
gives them their return.
But so now in this scenario, the new customers are going to be accredited investors only.
Yeah, basically the bigwigs, you know, the already getting rich while the rest of us stay poor types.
Yeah,
you know, the institutions that don't want to participate in this stuff because it is unregulated, because the SEC hasn't like come out with their definitive stance of like how to keep retail out of this fun action. Yeah, and bring all you Wall Streeters, you know, into this like network validating ecosystem. So I mean, that's what we asked them, we were talking about is like, dude, why would the SEC like diminish their jurisdiction by doing this, right? Because they're the ones who are coming out saying like, look guys, like, you know, Ethereum actually belongs to the United States because the majority of the network is being hosted here, I guess.
Right. So why would they do that? Because it seems like they're blindly just following the Howie test, and like they're just going after anyone who's violating it, and that's that. Yeah, they don't have like a holistic view of like,
like what does this do for innovation,
for our government, our country, like
economy?
You know, isn't this positive? It doesn't matter to them.
Like clearly, this is something that has been on a positive trajectory for the last decade. Right? Yeah, Web3 and crypto in general. Yeah, we might not want to exclude ourselves from the growth of this, since it's considering it's like a whole new global tech sector that's emerging. Yeah, you're right.
And I wonder if anyone's like doing checks and balances on the SEC, because Gary and Sam Bankman-Fried were buddies, right?
Buddies? Were they?
I mean, somewhat. They communicated regularly.
Yeah, I think you're right. With the family, because I think they might have went to the same school, like hit SBS parents and Gensler. I think there's some sort of connection there for sure. And then there was like political donations and all this stuff. So you're right. Checks and balances though? Nah.
Probably not.
I don't think so. Yeah. Those things don't really happen until like somebody gets busted, right? Like it's very, you know, it's very rarely like a politician at that scale gets like investigated for something, you know?
Yeah, and you and I were talking about this kind of pre-gaming for this video, and we were talking about like, what is the SEC's goal here, is to protect the retailers. And I was asking you, well, why? Why protect the retailers? Why can't anybody just do whatever they want? Yeah. And it looks like this has historical precedence, right? In 1920...
Well, you have to interpret it as such, yeah. It's like, why was the SEC formed in 1933?
1933, right. Yeah. Because 1920, right?
Yeah, what happened pre-1930s? The 1920s? Yeah. What was going on? Like, just nonstop crazy speculation, right? Right. Because the equities markets was open to the public, essentially. There was no regulation. It was Wild West. Kind of like where we're living in right now with crypto. It's the Wild West. Right. Until, like, enough people get burnt like they did towards the tail end of the 20s, once everything kind of like came to a crashing halt.
How much of an economy existed at that time though to crash? Like, isn't it like not even 10% of what we have today? And
probably not.
I guess you could attribute that because of regulation, right? We have such a flourishing economy, right?
More stability, I guess. Less crashes of that magnitude. Yeah. Right.
Okay.
That's kind of like what you want an ideal economy to look like. Like if you have moments like that where it's just not enough stabilization, right, and more volatility, more like depression.
Yeah, you can never really progress.
Yeah, you're gonna have a lot of things just wither away and die out in much like shorter terms. Like you want companies to like thrive for centuries. Yeah, right, to build like long-standing whatever the fuck.
I guess growth.
To continue to grow. And then as a result of that, the economy grows and more jobs are created, blah, blah.
So the motivation makes sense, right? The motivation to protect retailers makes sense. And so, but Brian Armstrong disagrees. He thinks that if you cut out the people, like the ethos of crypto gets a little dent in the armor.
Totally. I mean, the whole ethos is, ever since Bitcoin was incepted, was to kind of a totally libertarian free market economy type shit. Let the people decide what's good and not good for them, right? Let's not rely so much on institutional involvement to kind of dictate like our whole systems moving. We're supposed to, the whole Web3 ethos was supposed to be something in contrast to what we're already used to.
Yeah.
In the event, like all this shit that's supposed to be like a stabilization architecture all comes crumbling down. We have something new to resort to, right? A new monetary system, a new model.
Right.
But it seems like over time, we're just slowly integrating the old into the new,
Yeah. So I wanted to read the summary of that article from Paradigm, where they claim that Ethereum and staking is not a security.
Yeah.
So I want to get your take on it. So in the wake of Ethereum's transition to a proof-of-stake consensus mechanism, some commenters suggested that Ether may be considered a security under U.S. security laws. So, however, this interpretation stretches the application of Howie Test beyond recognition and fails to recognize that securities laws are meant to address information asymmetries which do not exist in this context. So then, now, in the analysis under Howie reveals that staking ETH does not constitute an investment contract as it does not satisfy either common enterprise or efforts of other prongs. So basically it fails 2 of the 4 prongs of Howie.
Yeah, which you only need to fail 1, right?
You only need to fail 1. There is no promoter with privileged access to information who could or should be forced to make disclosures, and validators receive rewards based on their own effort rather than relying solely on the efforts from other parties participating in the validation process.
So how does that work out? So how do you increase your likelihood as a validator to receive like a more reward?
You just stake more.
Is that? Yeah, I guess. But is that enough? So that's the thing. It's a really fine line of like trying to distinguish like what is enough, like I guess work contribution, because it's like you purchase a share in a company, right? That's clear security.
Yeah.
Because all you're doing, you're going to a broker, somebody's going to sell you these like fragmented representations of like the ownership of a company.
Mm-hmm.
You're giving them money and so there's that value exchange, right? And then that's the common enterprise, the company itself.
Right.
So you've now received a partial ownership of that enterprise. And you're not going to do a goddamn thing to like improve it, like help it grow or nothing. You're just holding that thing. And as a result, you're expecting, this thing you hold to grow in value.
You're expecting profits. That's why you bought it.
Yeah, you wouldn't buy it with hopes of it going down. Nobody's that dumb.
Yeah.
And then what's the last one?
On the efforts of others.
Yeah, so that's clearly a security. So the act of, I guess, staking is I guess what's in question here. Is that enough? Like, I guess the person who owns the Ethereum, is that enough contribution? I guess.
Yeah, and these guys, they're saying that ETH does not satisfy the efforts of others prong of Howie, according to Supreme Court's original formulation. It says applying security laws or disclosure requirements is unnecessary because there is no separation between ownership and control when investors rely on their own efforts for profits. And then validators in Ethereum's proof-of-stake network do not expect rewards from other validators' managerial efforts, but instead primarily from their own funds and effort.
Okay.
And then rewards are calculated as multiples of a base reward determined by total active stake in the network, with higher balance resulting in larger rewards and penalties. And then a court should find the staking fails to meet Howie Test due to lack of reliance on third-party managerial efforts, information asymmetries, and validator ability to control profitability through contribution, time, and effort invested.
Yeah, this is going to be an interesting battle, dude. I really do want to see. S.E.C. needs to just come out with it. Like, let us know what they think. Like this rumor shit is not helping.
Yeah.
But this is definitely a big precedent that's going to be set.
Yeah, flag is going to be planted.
I mean, this is as big as it gets.
Yeah.
If the SEC doesn't like this, then I mean, it's not like this isn't like the end of crypto type shit.
No, it's not.
It just means once again, in the United States, the
little people get screwed.
They get fucked again.
Yeah.
This is like we should be. If you live in this country, you should expect this.
Yeah.
At some point.
Yeah.
Right. We're just never gonna good times are never gonna just go on forever. At some point, the government steps in and
crushes dreams
and redistributes all the opportunity to the higher class.
Yeah.
Literally in the definitions of like the SEC is like, separating people based on like intellectual sophistication, like classes of intellect.
Well,
which is wild.
Which is difficult to determine.
Yeah.
And then the other classification is if you have $1 million net worth.
Yeah, exactly. That means sophistication, in their mind, which is so arbitrary and like ridiculous.
Yeah.
Right? Like you're saying, it's not a good approach.
Yeah. I mean, and this was established like many decades ago. So like $1 million, it's a lot of money, but with inflation, it's becoming less of a like barrier.
Yeah. So what does this mean in the grand scheme of things? I mean, it might mean Coinbase loses out on a lot of their. Do they take a cut for all this service provider?
They do.
So Coinbase is going to probably lose out in the short term if this does end up happening, which probably Brian Armstrong is very upset about. That's why he's.
But like you said earlier, if they end up losing, that means retail investors like BlackRock, swoop in. They put in like $500 billion into the Ethereum network because they just have cash lying around.
You think they'll do it through Coinbase as a vehicle, or they'll just start opening up their own brokerage accounts?
Well, I guess they could do that, but I figured they'd just go through Coinbase because they know Coinbase is already doing it.
I don't know, especially after like what happened to FTX. Like if I was a big institution, like a BlackRock, I would. It's like fuck you, Coinbase. I'm bigger than you. I'm gonna create my own on-ramp, off-ramp, regulated body.
Yeah, I just don't know if BlackRock does that though. Like they just hold money. They just.
Well, I'm just using them as like an example, but you know what I mean. Just these bigger entities that have all the wealth, capital and stuff like that. I mean, this is where we're heading, dude. It seems more and more we're seeing more regulatory pathways coming. It's obviously necessary if we're going to see Bitcoin ever get to this like prediction of a multi-trillion-dollar valuation.
See, but I feel like
this is necessary.
See, I don't think staking by itself, in my opinion, is a security because it provides other function. You are doing it not necessarily for the expectation of profits, like just from that point of view. I'm doing it because I want to support the Ethereum network, right? So I'm going to put my 32 ETH into the network to protect it because I believe in the ethos of crypto.
Yeah, but part of the agreement between that is you are yielding something in return, right? You're getting a share of the network's profits, right?
I don't know,
because the purpose of the network is to validate transactions, right?
Right.
So and there's a cost to that. So there's a distribution of earnings to people who are contributing to that. So that's where like at face level it looks very like Charles said. I mean, just it looks.
So now that's the only one prong, right? So now is there an entity that's supposed to be disclosing these things, right?
An entity? Like a common enterprise or something?
Common enterprise, yeah.
Somebody could argue maybe the ETH Foundation is that common enterprise, right?
Yeah.
So what's the definition of it's some sort of body that has like, I guess, supreme control over the entity itself?
Yeah, and there's something in here that says privileged access to information who could or should be forced to make disclosures.
Okay, so that's it. Yeah. Privileged access to information. I don't think so.
I don't think DAOs have privileged access.
I think some probably do over others, but in Ethereum's case, it's so
open. It's supposed to be open, yeah.
I think it is. Like everything that's being proposed or everything that's actually being developed,
implemented, yeah.
It's very communal.
Yeah.
Right? Like I don't think the foundation is pushing everything.
So
right?
So if Ethereum is not a common enterprise, if I'm buying ETH and I'm staking it, and it's not a common enterprise, right? It's clearly determined that it's not.
Yeah.
Therefore, it's not a security.
Of course, yeah.
And that's that.
So that's going to be a really good prong to kind of like work on.
Yeah.
Is to prove that there is no like, potential centralized force behind Ethereum, right?
And then finally, are you relying on the efforts of others when staking ETH? You first of all, you are expecting profit.
Yeah.
But you're relying on others for that profit. Is that what's happening when you're staking ETH?
Well, can it be interpreted as like you're expecting the developers of the Ethereum ecosystem to make Ethereum better, which they are. There's a roadmap.
Okay.
There's a plan to make Ethereum more scalable, therefore can onboard more transactions, therefore generate more profits.
But are the developers in a common enterprise though?
That's what I'm saying. That common enterprise needs to that I would go for that.
That's probably the only one, yeah.
I would go for that. If I was like in the Ethereum ecosystem, that's why decentralization is so important.
Yeah.
And it's been so important. That's why Ethereum has such a big stake, no pun intended, of such a big stake as far as like, I think being the most in the clear, because it is the most decentralized network, layer 1,
yeah, that
I think exists. So if Ethereum passes this, I don't know about the rest of them though. The rest of them are much more condensed. You know what I mean?
Yeah. All right. Well, let us know what you think in the comment section below. Do you agree with us? Is Ethereum really violating securities laws by staking? Is every chain out there that does proof of stake violating securities laws?
Yeah. Is this the end for crypto? Is it FUD season? Is Bitcoin going to 15K again because of this?
Or is this the beginning of like institutional investment in crypto?
Yeah. This is actually interesting. So we're definitely going to keep our eyes on this. About time we brought in some new FUD, dude.
Right.
We were looking a little too bullish there for a second.
Yeah, everything is starting to crash today, by the way. So
there you go. Now you know why.
Yeah.
This is it.
All right. Follow us on Twitter at The Block Runner, at MeadowZone.io, and at Roby AI, and we will catch you in the next video.
Peace.